Ladies and gentlemen, we have a story today that will send shockwaves through the whole real estate market. Because what have we heard? Inventory so low and the housing market won't crash. Well, today we got some new information and the banks and investors are bracing for an economic cataclysm. And the reason why? Well, that's because home price declines have just hit a decade high, and this spells big trouble for the housing market. So will it be a buyer's dream, or is this a market meltdown in the making? Well, all will be revealed in today's video that will leave you questioning everything you thought you knew about the housing market. So ladies and gentlemen, let's get into it. Look at this, everyone. Home price declines dropped the most in 11 years and new listings are plunging. So I know a lot of people have been getting very frustrated and very impatient. They've been saying, when is the housing market going to crash? Well, again, you need to remember, people, these things don't happen overnight. They take a long time. For example, in 2008, the housing market peaked around 2007 and it didn't bottom until 2011. But we are now starting to get the data that price declines are happening and they're accelerating. Because look at this chart. So this is a chart here from Redfin. We can see here a home price year-over-year appreciation hit a record in 2022, but now they are declining and declining rapidly, and we haven't seen these kind of declines since 2012. Now you may be thinking, down 4.1%, that's not a crash. Well, people, it all starts somewhere. It doesn't crash 20% in one go. It doesn't crash 30% in one go. It starts with 1, 2, 4%. Then people start to realize house prices aren't going up anymore. Then they start to discount their homes. Then they start to compete with their neighbors that are trying to sell their homes, and declines accelerate. Now, also what you need to know is the US housing market isn't just one market. So you may be watching, you may be saying, well, houses are booming in my area. Or you may be watching in another part of the country where house prices have fallen 20 or 30%. But as the housing market decline accelerates, we're going to see this become more broad. And look at this, Redfin has put out a report that homes in Austin and Boise are selling for $80,000 less than a year ago. Now, we all saw the housing market in Austin and Phoenix, etc. went nuts in 2021 and 2022. But these areas that have experienced the most price increases are also going to experience the most price decline. So the median price for US homes fell $17,603 on a year-over-year in April to $408,000. That's the biggest drop on record in dollar terms and the largest decline since January 2012. So did you hear that, everyone? This is the biggest drop in dollar terms in the housing market. And again, this is the beginning, because the Federal Reserve has not hinted that they're going to stop lifting interest rates. Yes, they're most likely going to pause in June, but that still could be more rate hikes coming. And the real pain for the housing market won't be felt until 6 months after interest rates hit their peak. So new listings dropped 26.1% on a year-over-year on a seasonally adjusted basis in April. That's the largest decline on record aside from April 2020, when the onset of the pandemic brought the housing market to a halt. New listings were also at the lowest levels on record aside from April 2020. So we're experiencing price declines right now, right when inventory is falling to record low levels. So what do you think is going to happen when inventory starts to go up? That's right, everybody. These price declines are going to get even worse once buyers start to have a bit more choice. And I think inventory is going to start increasing very, very soon. So pending home sales fell 21% year over year on a seasonally adjusted basis in April, an improvement from the record 36.1 decline in the fall. Pending sales rose 3.1% from March and the first month-over-month increase since December, and the largest increase since September 2021. And we can see this chart here of new listings falling to second lowest level on record in April, but once this trend switches, we're going to see price declines accelerate. Again, we can see the chart here for pending home sales falling 21% on a year-over-year basis. And we also have another grade here of the Case-Shiller Home Price Index of the national and top 10 metro areas. So you can pause the video here to find your local area, and we can see here that all 10 metro areas are experiencing price declines. But again, this data is lagging about 4 to 5 months. So we need to get the information right now, some forward-looking indicators, because these are rear-viewing indicators to see what's really going to happen for the economy, and that will ultimately lead to what will happen to the housing market. Well, something we need to talk about, everybody, is lumber. And lumber is absolutely tanking. We can see here lumber went absolutely nuts in April 2021. It hit $1,500, but now it has crashed around 80% down to $344. And many commodity trader experts and many analysts are starting to say this could bring down the price for construction for homes because the construction industry has been hit very hard. Builders are struggling to get sales. So hopefully with lumber coming down, this will lead to cheaper builds. But at the end of the day, it all comes down to consumer. Can they afford to buy or rent these homes? Because even if they're not buying their homes, if they're renting it from someone, and these big hedge funds that are buying up all these single family homes are trying to rent it, but the consumer can't afford to pay that rent, eventually rents are going to have to fall. And that means investors that are buying these homes, they're going to have to discount these prices as well. And people, we did just get a new report that 90 million Americans are struggling to make ends meet. Now, I did do a deep dive report on this with my brand new newsletter. It's absolutely free. You can click the link in the description below. So look at this, everyone. Almost 90 million American adults struggle to make ends meet, census says. So this is absolutely devastating, everyone. The US consumer, and this is not just the US, this is Australia, Europe, all pretty much Western countries, really everywhere. The consumer is struggling because the thing that people need the most, housing and food, is skyrocketing in price. Now, of course, the Federal Reserve and a lot of these market analysts, they say, look, if you remove housing, if you remove food, if you remove utilities, there's no inflation, there's nothing to worry about. Let's keep printing money. Well, the rich don't have to worry about it because that's a very small portion of their income. Most of their income goes onto their businesses and onto their investments. So when the cost of living skyrockets, it doesn't affect them. But what it does do, it sends their asset prices going up sky high. And that's why the rich keep getting richer and the poor getting poorer, because the rich own assets that benefit from inflation and the poor don't have any assets, and that absolutely devastates them with their cost of living. So listen to this. About 38.5% of American adults, or 89.1 million people, face difficulty in paying for usual home expenses between April 26th and May 8th. But what's really worrying is how this is starting to accelerate, and even people earning six figures are now not living a lavish lifestyle anymore. So this is up from 34.4% a year ago and 26.7% during the same period in 2021. Now, again, I'm going to tell you what this means for the housing market, but you really need to see what's happening in this report. So we can see with this chart here, everyone, we can see it started to rise in 2020, but then people got all their stimulus check. Inflation wasn't as high back then, but we can see here it really started to skyrocket in September 2022 when inflation hit its highest peak. Now, we can also see with this chart here, the share of struggling household varied widely by geography. Residents in the states with lower median income, such as Louisiana and Mississippi, are facing the largest budget problem. In 15 states, more than 4 in 10 adults live in households where it has been somewhat or very difficult to pay for usual household expenses in the last 7 days. And in some metro areas such as Los Angeles and Riverside, California, almost half of households are struggling. Well, everyone, we keep on seeing this again and again and again. In California, the cost of living is getting ridiculous, the taxes are sky high, and the safety and crime is getting out of control. And unfortunately, what this is leading people to do is make terrible financial decisions. They're now starting to tap their credit cards more than ever, right when interest rates on these credit cards are at record highs, and they're going to get caught in these debt traps. And also, too, when you go and apply for a home loan, if the bank sees you have all this credit card debt, and that means if people can't borrow more because of high interest rates and they also have more debt, it means there's going to be less and less demand for housing. So to combat these budget problems, many households are turning to credit cards for help. More than 25 million households say that they use credit cards or obtain a loan to meet spending needs. That's up from 22.4 million a year earlier. And we can see this chart here. Almost 2.7 million more homes use credit cards or loans for expenses. So people, I know we're thinking, well, okay, what does all this economic and housing market jargon mean for you in simple terms? Well, what this means is, everyone, it is finally happening. The housing market downturn you've all been waiting for has begun. House price declines have hit a decade high, but this is only the beginning. I think they're going to get worse, especially if we get 2 or 3 more rate hikes from the Federal Reserve. But the 3 things we really need for this housing market decline to happen is for inventory to start rising, the unemployment rate to go up, and also if people keep on using their credit cards for all these expenses and get caught in a debt trap, well, these people aren't going to be able to get approved for loans. There's going to be less demand, more supply in the housing market. It's just simple math. House prices have to fall. But not only for the average US consumer, also for investors as well. Interest rates are so high, and with the current yield these properties are giving, some only 2 or 3%, it doesn't make sense to invest in real estate right now. Because a lot of these big institutional investors can just simply put their money in a 3-month treasury that's paying 5.1% and face no risk. Look at this. So we can see here the 3-month right now is paying 5.1%, the 6-month is paying 5.1%, 5.2%. Now, this is assuming the US government doesn't default, but that's pretty low risk. Like, even the 12-month, we can see here is paying 5%. So these big institutions can just simply put their money in these bonds and do nothing. But everyone, what do you think about all this madness? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Again, if you want to get access to this in-depth research in case anything happens to me on YouTube, sign up for my free newsletter below. Thanks for watching. I'll see you all in the next video.